Welcome, everybody, to an extra special edition of Crossing the Line with Greg Heym.
Extra special?
I don't know. Right. We just want to get people to watch more than a couple of seconds. So don't go anywhere just yet.
We'll keep it in.
Well, you know, it's always fun to do the show. We always start off laughing and end laughing. I don't know what goes on in between because, you know, I think what people may not realize about hosting podcasts is you have to watch them back. And staring at yourself for 30 or 45 minutes is basically torture.
We laugh in the beginning and the end, and the audience laughs throughout.
Yeah, so let's hope. That is what we're shooting for. But, you know, we got the jobs report today we're going to get into. But maybe we should start with the Jets and the start of the NFL season. A lot of crazy games. My son was at the Buffalo Ravens game last night.
What a game.
Woke me up at 12 in the morning, tell me how great it was. So if I'm a little off today, you can blame my son. But he had a great time. It's probably the best game he'll ever see.
What a game.
I mean, Josh Allen, you know, married life seems to agree with him, huh?
They looked like they were
Dead.
Every time they made
Derrick
a move,
Henry's like stampeding over them every chance he gets.
Yeah.
I don't know how anybody tackles that guy.
But there was a little scuffle with the crowd. Did you see that?
No, I was sleeping.
Oh, you didn't even see it. All right, you watch the reruns. We don't want to recap the sports game right now.
No, look, you know, Buffalo, my son was telling me even just walking, you know, to the stadium, they got dropped off by a friend, the tailgating. Like, even at church, they went to church in the morning. The last thing the priest said was "Go Bills." Like everybody going up to do the readings was wearing Josh Allen jerseys. Like they are insane. I mean, they are really.
Did he tailgate too?
No, because they didn't have a car. College buddy dropped them off and they Ubered it home. Right. But it was, he had a great time. It was nice weather. Nice weather is going to get seeing a Buffalo game at night. And
you have these superstar athletes who you wait for them to cross that level to become a championship player, and maybe this is that year for him. It's a great way to start. Yes. Mahomes loses the first game. Allen wins. You know, obviously they're on that collision course. And
unfortunately, who's Buffalo playing this week? The Jets.
Got to be the AFC.
It's a great segue. Right?
And look, we could as Jet fans say, look, we put up 32 points. Pittsburgh was a playoff team last year who's now upgraded a quarterback. You know, they're a pretty stacked team. And obviously picking up Jalen Ramsey seemed to help since he knocked the sense out of Garrett Wilson on the last play after they'd been going at it the whole game. I mean, I guess I'm surprised. You would think the offenses would have more trouble than the defense, but maybe not. I mean, defense is defense. Go get the quarterback, guard your man. Offense, like Aaron Rodgers never plays in the preseason. Mm-hmm. Like you saw with the Jets how terrible our offense was with him early on.
So you're trying to apply like X's and O's and Ross. Like these are the Jets. It's of course Aaron Rodgers. Our first game having him, he went down
4 snaps,
and now all of a sudden becomes a hero. And what does he say after the game? I'm just happy I beat everybody associated with the Jets.
Aaron Rodgers.
What did we do?
Aaron Rodgers, you are a jerk. I said from the beginning you were Brett Favre 2.0. All you did was run your mouth for the time you were in New York, and you won a grand total of 6 games. Now, one of those that shouldn't even count. That's the Buffalo game. He gets credit for the win.
Because he started?
He started the game. Right. But you're a clown. You're one of the greatest quarterbacks of all time, but you only have 1 ring. Okay? Even Peyton's got 2. So shut up. Win something else. You're not Tom Brady.
Eli's got 2 also.
Yeah. Right. And
we're losing a listener now. There goes Aaron Rodgers.
Yeah, Aaron Rodgers. I'm sorry. We don't talk about dark rooms and psychedelics.
The state of Pennsylvania, we've been hard on. Between Philly and now Pittsburgh.
No, look, Philly got it done, although it was close.
Yeah.
If CeeDee Lamb could catch, Dallas might have won that game, but he dropped a couple balls.
Have you seen the movie Good Luck Chuck?
No.
Where he's the guy right after him, everybody gets married?
Correct. Like so it's a movie about this guy who every girl he dates, the guy she dates after him, she gets married. So all these women want to date him because they know that they'll date him for a little bit, they'll break up, and the next guy that they meet, they're going to get married. So I'm looking at the Jets. You've got Sam Darnold, Geno Smith, Aaron Rodgers. These guys play on the Jets. They don't do much. Then they leave, and now they become great.
Well, so Donald lost a tough one last game. Yesterday, they turned the ball over at the end of the game.
But he's far better than he was on the Jets.
You know
that's the point.
No, but that's not him. When the Jets drafted him, they were terrible. There were 10 games that he didn't play because of injuries. And remember, he got mono and missed a couple of weeks. Out of those 10 games, they didn't win any of them.
Right.
So and he was getting better every year. They were dumb enough to dump him to get what's his face that I'm already forgetting, Zach Wilson, right? I'm trying to get him out of my mind. So you think about it, they bring in Mark Sanchez. They got to get rid of him for Geno Smith. Then they got to get rid of Geno Smith for Sam Darnold. Then they got rid of Sam Darnold for Zach. And now Justin Fields played great.
Actually looked good.
He threw one deep pass and it was a touchdown. It's like, okay, we can't do that again. I'm telling you.
How did that slip in there?
And did any Jet fan not know that 60-yard field goal was going to go right down the middle and an extra 10 yards just to paint?
How did you feel yesterday going into the game and then at halftime?
My expectations, like any other Jet fans, were zero. Like maybe I want to see someone really hit Aaron Rodgers hard as a thank you for running your mouth and not winning any games. And they did that. They got after him. But the guy threw 4 touchdown passes. I think they picked on the new cornerback. Any defensive back who's not named Sauce Gardner on our team is not very good. And receivers were wide open all day. Why Sauce isn't guarding Metcalf the entire game, I don't get. They're playing zone, I guess, and he's walking free. The same guy slipped like 4 times and gave up big gains. It was sloppy defensively. I watched Aaron Glenn's press conference. He got them to play hard. But Quincy Williams, the late hit, I think that was part of the beginning of the end.
Yeah, listen, they came out strong. They scored on the first 4 possessions.
Because Breece Hall was just going.
Amazing. So let me ask you guys something. So my nephew, who is 10 years old, went to the Jet game. His father, who married my sister, is a Giants fan. Somehow my nephew has become a Jet fan.
Oh, no.
And I've been trying to tell him, you don't need to be a Jet fan.
No.
You don't need
You'll
to.
have enough other misery in your life.
And he feels already like he's going to be a traitor. I said, you're only 10. Just go to a Giants game. Just go. And your dad's a Giant fan. It's totally acceptable to do so.
Pick a team with a history of getting good quarterbacks.
How did that happen? How did he become? He's 10.
So me and my brother, who he looks up to a lot, are Jet fans.
Makes sense.
See, that's your fault.
A couple of kids with Jet fans. Yeah. I feel terrible about it.
You know what you do?
And I'm trying to convince him the other way.
Have you bought him any like swag or gear as he was
no
a kid?
Jet, no Jet
nothing.
Gear. No.
Okay. You're a lawyer.
Do I put on a Giant hat now just to sway him?
No, hit him with a cease and desist order to stop rooting for the Jets and me.
Yeah, like
okay.
When he was 8, I was trying to teach him what same old Jets mean.
I told my son
he's living it.
The same thing, and now that he's going to be up in Buffalo for a couple of years, he's already bought the Bills sweatshirt, and good for him.
The Kool-Aid.
We root for enough loser teams as it is. The Jets are the most pathetic of all of those teams. The longest playoff drought in professional sports. Haven't had a winning season in over a decade. Just pathetic. The worst ownership in professional sports. It can't develop quarterbacks. Always make the wrong move. Always hire the wrong people. And the one thing is,
none of this, by the way, is on that iPad. He's just going
how
for
the
it.
job report impacted the Jets' performance.
Every head coach that we've hired, like the last 6 or 7 of them, have all been first-time head coaches. See a pattern here? Like maybe we should get someone a little experience.
Let him cook. We could just sit back for 30 minutes and just
you
let
don't want to
Greg,
send me that guy
let
ranting
Greg
that got me all fired up. All right. We're going to get into the jobs report and do a professional economics
We're going to meditate a little bit during this break.
That our families can be proud of right after these messages.
Your dream home is closer than you think. I'm Scott Nadler, VP of Mortgage Lending at CrossCountry Mortgage, and I'm here to get you the perfect loan to match your perfect home. From first-time home buyers to seasoned homeowners, I've helped clients make their moves with confidence. Ready for a smooth, stress-free home buying experience? Let's get you moving today. Call me and let's turn those dreams into keys.
Sedgh & Zuckerman is a boutique residential law firm guiding you and your clients every step of the way with a solution-oriented approach. Make sure to work with a deal maker and not a deal breaker. Contact us today at sznylaw.com.
What do you really need to know about buying or selling a home? First, it's serious business, and it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
We're back from Studio 1873. All right, so, Scott Nadler's favorite day of the month is the first Friday of the month because that's when the jobs report comes out. And Scott just lives to look at revisions and find the negative. Where
know me
I'm
so
Mr.
well.
Happy-go-lucky, right?
Yep.
Next to you. But this was a jobs report, the first one in a while that seemed to make sense. 22,000 jobs in August. It was less than the 55,000 ADP had, but that's closer than they normally are. But economists are looking for 75,000. So this is a huge miss. And the unemployment rate ticked up. But June was where it gets ugly. So when June, I went back and looked at the BLS's press release.
I'm happy you did.
In June. The original estimate for June was plus 147,000. That is now minus 13,000, which makes it the first month of job losses since April 2020.
Wow.
Yeah.
So that's scary. Now, July's figure was actually revised up by a little bit. But even with that, that cancels out some of the adjustment to June, but it's still a minus 21,000 for those 2 months, which is bad considering you think about it. With the prior 3 months, May, June, July, was 106,000. Now in 4 months, it's like 120,000. That's terrible. Yeah. And and the job growth that we did have, the areas where we don't necessarily want it there, healthcare, social assistance. Government funded, not having any direct relationship to the economy. We want to see private sector businesses hiring that don't rely on government money. And by the way, the government employment fell by 15,000 and is down almost 100,000 since the beginning of the year. And in a sign that I think we all know this if we talk to anybody who's looking for a job, unemployed workers are now spending an average of 24 and a half weeks to find a new job. That's the longest time in over 3.5 years.
That's tough.
So what did you think when you saw this?
We just spoke
you
about.
Didn't text me. I was like, why didn't I get a Nadler?
I was waiting for you to text me. I was hoping for.
I don't like. Sometimes I'm shy. I don't make the first move.
We just spent 5 minutes talking about the Jets and football, and there are specific metrics you can look at to measure the success of a team. When you look at the Fed, under Powell's watch, we had inflation reach a 40-year high under his watch. And now when we look at jobs, we're seeing jobs be...
Are you trying to bait me into another rant by mentioning the chairman of the
I'm
Fed?
stirring the pot a little bit, I know. In March, Powell gave a speech talking about how the jobs market is very solid. July 30th, he gave another speech saying the same exact thing, that the jobs market is very solid, the labor market is solid. Well, you could see how misleading that can be when you're going off of inaccurate data.
Correct.
So, I don't believe there was any malcontent here, but the data that they're using, and I do blame them because a lot of the economists that we follow, you being one of them, were ringing the alarm bells, saying there are issues here that the Fed is not following. And if they can't see it and we can see things here, there's a problem. And to your point, when that June number comes out and they show 147,000 jobs, what do you think that did to the bond market and mortgage rates? When we're talking to clients...
by the way, the QQs are coming out, the quarterly census of employment and wages coming out today.
Correct.
Unfortunately, after we film this podcast. So we'll have something to say about that in the coming weeks, which will revise everything up to March. And then we'll see, maybe the beginning of the year wasn't so good either. And then all of a sudden we have a bigger problem.
Those become real numbers when that comes out? Like those are
those are based on state data. The thing is like ADP is a much bigger sample because ADP pays like so many of the people in this country. They only do private sector pay. And it seems like their data, certainly over the last couple of months, seems to be more accurate from the get-go. And they don't have to revise stuff because they're just getting it all at once. Now, when you take it, I think the both surveys are done right in the middle of the month-ish, around then. But, you think of the revisions, and it's scary because, like Scott said, like, how are you supposed to make, now you're an attorney, you're counting on important information to be accurate when you're looking at a contract. I mean, how do you look at this from a legal standpoint? We talked about suing the BLS. You said we can't do that. But what do you see as somebody who really counts on accuracy in a different way? That you say, like, what's going on here? No wonder the head of the BLS got fired.
Right. So it's always, you got to read the footnotes sometimes, right? So when these numbers come out, you can't take them as fact. You have to understand what the margin of error is and why it's like that. So you shouldn't be relying on these as fact. It will be interesting to see how the accuracy adjusts moving forward now that we have the replacement at the head of the BLS.
Well, he's not in there yet.
Well, he's just temporary, right?
They have the
acting.
deputy director is
Acting,
acting
right.
as director now.
Right, so we'll see if it's more the methodology that was the issue or if there was some other sort of bias that was involved there. But I remember when I asked you in July, I said, what can happen between July and September that would impact rates not being raised? And you said there would have to be explosive job
growth.
report.
And
not only that, but it went totally the other direction to the
way.
point where we're now, the odds maker is saying 100%, a quarter point drop, and now I think it was 12 or 18%. There may even go down.
Well, no, I checked this morning, and this does change all throughout the day.
Right.
But as of early this morning, the odds of a 25 basis point cut are 88.1%. 50 basis point cut, 11.9%. So you add those together, and that's on. So their basic markets are saying there's a 100% chance rates are cut, and it's pretty much sure to be 25 basis points. The question is, how many more cuts follow that? Because, as we say all the time here, monetary policy changes take up to a year to show any impact. I mean, think about it. We had a full percentage of cuts last year. It's been over a year now since they started cutting last year. Where's the benefit? The credit card rates aren't down. The variable rates aren't down. The auto loan rates aren't down. And we're not seeing explosive economic growth and hiring. So what did that do?
Yeah.
But yet on Friday though, I did get a message from a client who had locked in his rate 60 days ago. He's going to be closing in September saying, hey,
I want a lower rate now.
How does this report impact my rate? And somebody's going to have to call him today and tell him, sorry, you're locked in, and that's
Make Scott do it. He's the only stuff.
The labor market, you had mentioned that it's the first time in 5 years that we've had a negative number.
April 2020.
April 2020. So the vacancy to unemployed ratio fell beneath a 1. So this means the job openings versus people who are unemployed. There are more people unemployed than there are job openings, which is the first time that's happened since February of 2018. So that's a big deal.
And it used to be, if you think even just back a year or two ago, it'd be 2.5 jobs for everybody looking for one.
Right.
But the thing is, some of this data is being over-exaggerated. Like the JOLTS report, which looks at job openings, labor turnover, things like that, and trails by a month. It's like, it's lowest level in months. Okay, it's over 7 million available jobs out there. Mm-hmm. That's whether or not we talked about how accurate we think it is or isn't.
Right.
But still, claims for unemployment still incredibly low. The average historically has been about 300 to 350,000. We're sitting at like 250,000 a week. Now the continuing claims are a little bit different story, but some of that data doesn't look bad. A 4.3% unemployment rate doesn't look bad.
The U6 also was like 8.1%.
Right.
Which
U6 is underemployed.
Right.
Included people working part-time because they can't find
Nadler
full-time
Richardson
job.
also said that as well, that there's more of an underemployment issue in our country, where you saw a lot of the jobs that were created were part-time jobs. People typically, if they're looking for a job, they're not looking for a part-time job. They're looking for a full-time job.
Companies in uncertain times aren't going to bring on full-time people.
Right.
Benefits are very expensive.
Right.
All right, before everybody says I can't take this anymore, is there any good? There was some good news in the report. Wages still rising fast.
Look at you,
inflation.
a glass half full guy, in a report like this.
Crossing the line mug, half full. Okay.
That's because of the leak.
Well, the leak. So up 0.3% last month and 3.7% higher than a year ago. That's like 1% higher than inflation. So that's good. But we always talk about the difference between, forget ADP and the payroll survey. How about the payroll survey versus the household survey, which are in the same report? The household survey is used to calculate unemployment. Mm-hmm. Uses a little different methodology. Payroll reaches out to companies. How many people are working there? Right. Okay. They don't care if they're full-time, part-time, if they double count people, they don't care. Household survey, we call up Scott and Sarge, as I'm calling him now. That's his new nickname. By the way, I didn't introduce Shar, Sedgh, and Scott Nadler, but Loan Daddy and my attorney, Shar. But Sarge over here, I call him up and I go, are you working? And he goes, no. And are you looking for work? Because that's the important thing, right? But so that gives you the unemployment rate, but it also gives their measure of employment, which was up by 288,000 jobs. Now,
Also sounds very unreliable.
Well, the payroll survey is a much bigger survey. The household survey tends to count businesses that are just gotten going, startups, because they're not on the BLS's radar yet. So, and they don't double count. They do differentiate part-time and full-time positions. So, look, it also, so you'd say, well, Greg, if the household survey showed employment up by 288,000, how come the unemployment rate went up? That's because the labor force went up. The labor force is the number of people either working or looking for work. So people aren't so discouraged that they've given up looking. I think the problem is that it seems like this labor market has gone from 60 to 0 in a month, right? When you think about when these revisions started. What can we do about that, Scott?
And they have real world consequences. Again, I think the bond market, the day that the June report came out showing 147,000 jobs, the bond market was down 71 basis points. That can translate to mortgage rates going up like 0.25%. So those clients that Shar and I are talking to who are actively looking, that can cause them to pump the brakes a little bit and say, you know what, rates are going up right now, I'm not as interested. And then you see where the actual numbers are, what that would have meant for those buyers out there at that time, it would have been the complete opposite. I do want to ask you though, now that we have these numbers, if you're the Fed chairman 6 months ago, 8 months ago, when would you have dropped rates? Would you have dropped rates a bit earlier?
If I had these numbers to go with?
If these were the actual numbers.
If these were the numbers I was getting, especially in June, I would have started cutting in June. I think the thing is, look, and people say, Greg, aren't you an inflation hawk? Weren't you yelling at them not to do anything? The difference is this inflation, the way we measure it, is not going to come down in the manner it should. We've talked many times about how housing is basically all the monthly increase that we see because of the crazy way that they measure it. And, some of this is just stubborn. When core inflation is higher than the headline number, that's a sign that it's going to take longer to come down.
You could also cut and still be restrictive as
right.
well.
The question is keeping the federal funds rate in the mid-4s appropriate based on the economic conditions of today? And you could say it's not no job growth, but it's very weak job growth. And it's not moving in the right direction.
Right.
So I think this creates more uncertainty, and more volatility. And companies that thought everything were okay, maybe their business is good, they're going to go, oh, wait a minute, maybe we shouldn't.
The quality of jobs also, which you touched on, is also alarming. Yeah. You're not seeing high quality jobs, the ones that are being created that are really going to stimulate the economy. We're not seeing that right now.
Right. And the Fed, it is a hard job. But if you don't like the pressure, don't take the job. It's like you have to be ahead of the curve. Right? That's what you're always hearing.
There are so many smart people that we listen to and read that have been ahead of this, who have been yelling about this.
Like the Greg Heym blog.
You included. Follow
the
Greg.
Greg Heym podcast, Cross
Follow
the
Greg.
Monitor. No, look, I get things wrong too. Everybody does. Anytime predictions involved,
Christopher Waller, for example. I mean, he looks smart now. A Fed governor who was, Michelle Baumann also talked about lowering rates earlier. Yeah. They got outvoted. And
that was the first time in 30 years two people, had dissented.
Dissented, yeah.
And look, I mean, that's the way people should speak their mind. There should be different votes on this. But I think the problem is the lag time between when you make the decision and when it filters through the economy, is very unpredictable. And in some cases, it doesn't have the effect or any noticeable effect.
Exactly.
That's the problem. And now you're an attorney like Jerome Powell is. Do you think an attorney should be running the Fed?
Thank you.
Taking a job away from yet another economist?
Thank you for lumping us together. I appreciate it.
Hey, I don't get lumped with economists. It's like, hey, why don't you tell Jerome Powell to do this? I said, I do it every week on my show,
So one of the things that we talked about from the employer standpoint is that although volume is down in our industry, the number of closings we're doing is much lower than it was. The amount of work it takes to get them done is a lot more. So you generally need more staff to do less work. The problem with our industry is that there's certainly roller coaster waves of times that you're much busier and much slower. And as an employer, you have to decide, what am I going to staff myself for? And you try and find that happy median where if it's a little bit slow, you're not committed to too much salary, but when it's busy, you're not spread too thin where you can't give the right level of service. And we were just talking about how an office of, let's say, 4 or 5 people, if one person goes on vacation, everybody's 20%, 25% of your workforce is done. So
especially if they go away at a time where interest rates are now dropping.
Exactly.
Pretty quickly, which I know we're going to talk about, but yeah, exactly. You're absolutely right. So, and we see that in our space also. Trying to forecast the volume that you're going to do is very, very hard to do. So to staff accordingly based on that is tough.
So the fact that a law firm, let's say for me or for Scott, we may keep it a little bit tight. Or in our industry, I definitely have enough work to hire 2, 3, 4 other people. And
I told you got to save one of those jobs for my son when he graduates law school, like 7 years from now. It's part of the sponsorship agreement.
So the economy may dictate for me to be able to hire another 4 people. I just can't do it because of what you said. The uncertainty of what's going to come up.
Economists predict the economy. He's going to be asked all the time about rates. Where are they going? You're going to be asked in a transaction, is there any problems we have to worry about? Are we going to close on time? And your answer sometimes has to be, I don't know. I think so.
That's true.
Right?
Sometimes
we have a contract that says we're supposed to.
Yeah. But the problem is if you're not playing with the right set of facts to make that decision, all of a sudden now
right.
You
Like if you haven't looked for open permits, that haven't been closed, and
exactly.
He's not watching his phone every 5 seconds, it's hard to give accurate information.
But we also talked, you asked about whether him being an attorney is a good thing, and we talked about how when they were out, where were they?
Jackson Hole.
Jackson Hole. His wording wasn't sufficient to your liking.
Because it's Fed speak.
But that's him being a lawyer, because you don't know what would have happened with these job report this month. So if it had gone up or down, he would have to backtrack. But the fact that he gave a vague answer.
You can say that. No, it isn't so much the vague answer. You could say things like, if we see, a marked slowdown in the jobs reports in the coming months, we're gonna look to make a change. That doesn't guarantee anything. I think that the way that they talk about this moderating and we're well positioned to do this, the average person doesn't know what the hell that means. And people say, well, the markets know. That's great. But again, I had this argument with my uncle who's a wealth manager. He's like, I think it's better he talks like that. I said, yeah, because you know what he says. Right. The rest of us, we don't get, the Americans don't get subtitles when Jerome Powell or any official speaks, which is, why can't you talk to the American people in a way that they can understand?
You are the subtitles. That's what this podcast is.
That's why we should have a dual screen thing going on the next time.
Now, looking at the real estate community, you can look at this 2 ways. You're seeing that this report is going to lead to interest rates dropping, but if fewer people are employed and fewer people have money, then fewer people are going to be buying homes. So when you get all these questions from real estate agents, I get a lot of questions, you get a lot of questions, what this means for our market. And again, our market here in the city is probably a little bit different than other markets, but for real estate as a whole, it has it's like a catch-22.
Well, I think the timing issue and the people trying to time the rate and the price is unique. Usually you're not trying to figure out 2 things at one time when you're buying. And you think of the change for most of the country, it went like, buy anything because it's all flying off the shelves. Now inventory is building and rates are falling. They're at the lowest levels since October. We had the biggest one-day decline in mortgage rates in over a year, although mortgage rates right now are still higher, slightly higher than they were a year ago. So it shows you what a roller coaster this is. But I think for people, again, this is where we'll warn, don't get greedy.
Right.
But before we get into that, we're going to tell you the secret to buying right now, but we're going to make you watch these commercials first.
Hi, I'm Evan Greenberg with Langdon Title. I specialize in title insurance across New York, helping real estate attorneys, agents, and brokers close with confidence. I solve problems fast and keep your deals moving. Contact me anytime.
Ultimate Diamond is New York City's most established family-owned jeweler. With over 65 years of experience, Ultimate is renowned for its exceptional, custom-crafted diamond jewelry, its bespoke engagement ring designs, and its ability to source rare, distinguished timepieces. Ultimate has built a legacy of timeless craftsmanship and discretion, making it a trusted name among those who value refined luxury. Learn more at ultimatediamond.com.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
All right, we're back, and as promised, we'll talk a little more about mortgage rates. About 6.5% on Thursday when the Freddie Mac number, now that's lower. Now, we've talked about that there's been these opportunities before where rates have come down, and they've come down significantly the last couple of months. Are you still getting people that are still, you would think you'd be getting a lot of calls like, I want to go now. Now it's go time.
Refinances are definitely coming back. So a lot of clients that closed in the last 12 to 18 months or so, in that range, there are a lot of clients out there that have rates in the 7% range. So we got a lot of inquiries. Either we were reaching out to people proactively or we were getting calls about that. But yeah, any client that is, it's kind of twofold. You have the clients that are in process right now who are not locked in. You have the prospects who are actively looking, saying, well, how is this impacting my rate? And for those clients, it's an easier conversation, right? Hey, the market's trending in our favor. Rates are coming down. Your payment's going to be lower. Great. It's the clients who locked in their rate 3 to 4 weeks ago who now are coming back, hey, what could we do about my rate now? For some of these people, there are float down options where you can lower it. Some of them, there's not that much that you can do right now. Rates also don't drop. We talked about this before. Rates go down very slowly. They go up very quickly.
AKA the Nadler rule.
The Nadler rule.
So imagine Loan Daddy's got his own rule. I mean, Shar, I don't have any rules, and I'm an actual economist.
I thought we had one for you.
No.
I'm trying to remember what it was. It wasn't memorable, obviously, because we can't.
No. The Greg Heym rule is you say the Jets, and he loses his mind.
Overall, word spreads very quickly. And, we've been getting these calls also for some time leading up to this because the Fed meeting is coming up.
Yeah.
And a lot of clients are of the impression that when the Fed meets, they're going to lower rates, and that's going to automatically impact mortgage rates, which we've talked about here. So these calls have been coming in where we're having these conversations. But, when you get that jobs report and you have every news publication coming out there saying mortgage rates are immediately dropping, and they have, your phone rings. And of course, it happens on a Friday. So, your phone is ringing, and it's not.
Now I had to make a phone call. All right, tell the yacht that we're going to be a little late.
But I think clients need to understand it's not one of those things where, someone's at 7%, they call us, we say your rate's at 6.3%, we can lock it in. No, we need to run your credit. We need to reevaluate your income, your assets. It's not like we could just plug and play. There's things to do. So for a lot of clients over the past 30 days or so, we're teeing up their files, putting them in a position where, hey, when rates drop, you want to be ready. It's not something where we can just flip a switch and all of a sudden lock in your rate and we're ready to go. Because these rates don't last forever. You could see inflation data coming in this week that comes in higher where rates automatically go up.
Right, CPI is up next, in the month-long economic release panic mode that we all seem to be in.
And you're not day trading where you're trying to just find the floor and just say, I think it's going to drop, I think it's going to drop.
I think that's exactly the mindset that they have, unfortunately.
I think right now, anybody with a 7 at the beginning of their interest rate, 7 or higher, should be calling their loan officer, including you, to see if it's worth it for them to refinance.
Exactly.
Don't be discouraged. You do need to resubmit numbers. It's much more simple than when you originally bought your place, but don't be discouraged by the process. Get that phone call in now, because if it's not worth it now, it'll be worth it very soon.
Also, buying a home is an emotional process. Refinancing it really isn't. It's just let's look at the numbers. Let's say here's how much you'll save every month. Here's what the cost is. What's that break-even point? Does it make sense? And do you want to roll the dice? Because now I could save you, let's make up a number, $500 a month. If you're thinking, it's not really enough, that's not going to move the needle for me, I want to save $700 a month, great. At least we know what your number is and you know what it is.
Right.
And then we can act accordingly.
Needs to go to, exactly. Yeah. But it also gives you flexibility to do other things. If the value of your property has gone up, you can take a little bit of cash out. You can pay your rate down if you saved a little bit of money. You can shorten the term. You can extend the term. You can go from an adjustable to a fixed rate. So there's a lot of things that you can learn by just making a phone call. Now, you should be calling Scott. But a lot of times the closing costs are much less if you call the bank of which you originally took your mortgage out with. You don't pay mortgage tax again on most of the loan amount, and some of the assignment fees and things like that are lower if you stick with your lender as well. There are also some banks who have offered you no closing cost refinances. I've never seen them actually come through with that, but I do hear that there are banks who have offered that. So don't be discouraged. Make that phone call now.
Well, and it's education too. Like you probably warn some of the people that are calling you that if we lock in, we lock in. Like this is not. There's no float down here.
Timing is really important. When are we closing? How long are we locking in that rate for?
Right.
Because we have a client that we're working with now whose closing date is, I think it was September 24th. Well, we didn't lock in the rate yet. So now if we lock it in now, they're asking the question, well, if we lock it in, then rates drop, can I float down that rate? Technically, yes, but I wouldn't hold my breath because in a 3-week period, the odds of your rate dropping to a degree where it makes sense for you to float down is unlikely.
Is there a cost?
So you need to be
is there a
realistic.
cost to return to float also?
Typically not. You mean to float down the rate?
If you've locked down and then you want to float down, yeah.
Typically no.
Oh, really?
Yeah.
I thought you pay an eighth.
No, you need to be eligible for it. So you could pay a fee to lower your rate, but if your loan is eligible, so this is not exactly how the math works out, but typically it works around this. Rates have to drop around 3/8 of 1% for us to then lower your rate by an eighth.
Gotcha.
So let's say rates are at 6.5%, the market has to drop all the way down to 6.125 for us to then lower your rate to 6.375. That's typically the way the math works out.
Okay.
You got all that? No, that's good information to have. And me and Shar actually, we talked about this. So we always ask people what is going to upset you more, right? You were looking at a rate maybe
That's
a couple of months ago when you started. No, it's that Greg Heym rule. Everything is copyright Greg Heym Enterprises on this show. Loan Daddy, courtesy of Greg Heym Enterprises. No, I mean, look, people started looking. It was probably near 7, and they were all frustrated. Now it's below 6.5. Okay, why aren't you jumping? Well, I'm going to wait. I love
greed.
I love when people say like, "Oh, I want this rate," or they say, "I'm going to get the house for this much." It doesn't work quite that simply.
Right.
All right. Now for a little fun thing. In celebration of the first week of the NFL season,
you're celebrating.
Well, CNBC ranked the most valuable NFL franchises. Before we let you guess what number 1 is, start thinking about it. I know these guys know already, but the average NFL franchise is now worth $7.65 billion. That sounds like a lot of money. It's because it's a lot of money, up 18% from last year. The NFL is the most valuable league. It gets the biggest ratings. Having a shorter schedule makes every game that much more important. There are a bunch of really fun games to watch this weekend.
The NBA had some recent sales also, but it still pales in comparison to what the NFL is doing. Because the Lakers sold for $10 billion.
Right.
The Celtics were, I think it was like $7 billion. Is that right? And then like the Trailblazers sold for $6 billion. But
the Mavericks also recently got sold.
Yep. But you're saying average NFL is $7.5 billion.
NFL,
it's a massive
complete
number.
package. There's a stadium involved. There are sponsorships, and the team that is number 1 blows a lot of the other teams away in sponsorships. They have a fantastic stadium. Even though they haven't won in 30-something years, as my nephew who lives right near the stadium points out, they're still a team that everybody follows. You either love or hate them.
It's a brand. It's a brand.
And they have a very public owner who just loves to talk about everything, and that's the Dallas Cowboys, worth $12.5 billion. All right, who's chipping in now?
I gotta
Ray?
say, Jerry Jones. First of all, I thought he stayed in this game because he just wanted to be relevant. Because once you sell the Cowboys, nobody's going to care what you say anymore. And right, they recently had the contract controversy with Micah Parsons,
Who got a nice sack for Green Bay on
Right.
opening day.
but if you're Jerry Jones,
this
why
could
would
be
you
Herschel
pay?
Walker all over again, because you traded away a guy whose value is not going to go up. I mean, the guy's an all-pro. He's a great player, but he's already a malcontent. And, remember the Herschel Walker trade? That helped build that Cowboy dynasty of your. But I have a Jerry Jones story.
Go for it.
And this shows you an owner. And people like Steinbrenner have been this way. Some owners, like Mark Cuban when he owned Dallas, very public-facing. In fact, he even got the team technical sometimes for running his mouth. But every game they pick some season ticket holders who get to stand in the club area where the Cowboys run out into the field and back.
Great
And that's kind of
experience.
cool, but they don't really stop. They may wave. But Jerry Jones stops. And he was signing everything. He came up to my nephew and he said, "How you doing?" He's like, "You want me to sign that? I'll sign that." And he's signing it. And he points to my brother and goes, "Is this your grandpa?" And he starts laughing. And he goes, that's my dad. And he goes, "This is my uncle." He shakes my head. He goes, "Hey, uncle." I'm like, "Hey, Jerry." Like, he loves interacting with people. I don't think it's a show with him. Now,
He's a showman.
right. There's other
But
things
he's
about him that,
authentic, yeah.
that have come out that maybe aren't so nice. But the stadium is a cathedral. The game day experience there is phenomenal. They really did it right. And you look at what a junkyard MetLife Stadium is. It looks like an erector set that went awry, and they don't even bother to dome it. Just another thing wrong with Jersey. You look at this team. So here's the interesting thing. So Cowboys, they're an iconic franchise, right? They've had some good players, and they haven't won in a while, but they've been mostly good.
They capitalized on their dynasty. That's for
Right.
sure.
And like the Lakers, have built a brand, and the Yankees.
It's also interesting that, in the 70s and 80s, owning a sports franchise was a vanity project. A lot of these owners were not making money at all. They were losing money at an exorbitant rate. And then starting in like the 80s into the 90s, these TV contracts became exorbitant, and sponsorship deals where all of a sudden the values became really, really big.
And Sunday Night Football and Thursday Night Football. And you think
This
of
week was Friday Night Football.
Yeah.
right,
so.
Red Zone.
The deal that the NFL
DirecTV
just
stuff.
made with ESPN as well. So then you started to see a lot of these like tech guys, like Steve Ballmer with the LA Clippers and Cuban, obviously, and Matt Ishbia getting involved in
Paul
sports
Allen
franchise. Paul Allen
on the Seahawks. Yeah.
So you see some of these guys get into it, and again, it was looked at initially as a vanity project. It's nice to have. It's cool, but it's a legit business.
So what Mark Cuban recently said when he sold the Mavericks was he felt when he bought the Mavs, it was more of a tech guided investment, but now it's turned more into real estate / casino mind frame, and he's like, that's just not my area of expertise. But if you look at this list, if you want to go through it, how many winners do we have here?
Well, here's the interesting thing, right? So the Cowboys won, the LA Rams 2. Now, again, being in LA is the place you want to play.
Interesting.
They're worth 10.7. The Giants are worth 10.5. Now, again, I don't think the stadium helps the Giants, but they have won 4 Super Bowls, and they have been a decent franchise with stable ownership.
Mm-hmm.
This is the problem with the Jets. They have unstable ownership. Raiders, Allegiant Stadium doesn't hurt. I hear that's an amazing place to go. I haven't been there yet.
A brand as well. I mean, like in the
brand, they're the enemy.
Yeah.
That's every league needs a villain.
I remember that like starter jacket, like the Raiders, you had like the Charlotte Hornets, those
Yeah.
like, in the 90s, that was
I
a big
was a
the
thing.
kid, I
Raiders
had-
hat was iconic too.
Yeah.
In the 70s, the Raiders were winning, and Ken Stabler was my favorite football player because, like me, he was left-handed. I wasn't such a good quarterback, but I had the Raiders shirt with the 12 on it, and I was a Raiders fan till I was probably 11, 12, and then I said I got to root for a New York team, and I was dumb enough to
It was
pick the
cool.
Jets.
It was cool to
Yeah.
be
By the way,
a Raiders fan.
so you have Raiders, Patriots, and then the Jets.
Number 7. What number
Six.
is
The
that?
Jets are number 6 which is like what they would be in their division if they were 6 teams. It's a function of being an alleged New York team. But just think of how much that franchise would be worth if they had been allowed to build the West Side Stadium. I think that would have been a huge thing for them. And because the 3 people that make that decision didn't represent the Midtown West area, the Hell's Kitchen-ish area where it was going to go, it didn't happen. But you talk about like lopsided, the least valuable team is the Arizona Cardinals at just under $6 billion. And you go, all right, they haven't won anything ever. But at 31, we have the Buffalo Bills, who, are getting a new stadium next year, but are one of the top 3 or 4 teams in the league and sell out. I mean, they're crazy. It's like you would think that's the only thing that goes on in Buffalo is the Bills.
It's what does winning do for the value of these franchises? And it's a serious question because I'm not entirely sure.
Kansas City is at 18, and you would say they're arguably the most.
But then, if you look at the
NBA,
for example, and the NBA and NFL is a little different here because again, the Lakers and Celtics, who historically are the best franchises, sold for a lot of money. The Warriors, their valuation has increased exponentially since they moved into a new stadium. They have new tech ownership as well. Stephen Curry obviously helps them a lot. So it seems like there is a correlation, somewhat of a correlation there. But this list for the NFL, I mean, again, it's more of a brand, and it's that the Raiders brand, the Cowboys brand. It's interesting.
They're businesses. It's not. There's no direct correlation to the team's record on this, because you see it. The Bears are number 7.
But imagine if the Cowboys had a Mahomes and they went on a run, and it's not unthinkable that they could in the next 10 years go on a run at some point. What is that? Is that going to bring their valuation up a lot more, or is it kind of built in already because it's such an iconic brand?
Well, I think everybody wants that franchise player, and in the NFL, it's quarterback. That's 100%. All that matters. And people like Mahomes and the way Brady was, Lamar Jackson is a phenomenal talent and a lot of fun to watch. You want those superstars, and even other sports. The Yankees, why do you think Judge gets all that money? He's the ultimate goodwill.
But these athletes also, their brands, they themselves. So Brady is his own brand. Mahomes is his own brand. And the guys that embrace that, are so marketable by themselves, and they're out there marketing who they are with their own team as well. That significantly, probably does something for their franchises too.
And remember, when Steinbrenner bought the Yankees in the early 70s from CBS, they were a terrible team. Mantle had retired. They were losing all the time. He got it not for nothing, but when you think about it, it's still the Yankees, the most winningest franchise in any sport. But he had vision,
right.
And it's all about stadiums, it seems these days, and sponsorships. They don't care, because you look at these teams on here, it's been a long time since a lot of them have won anything, particularly the Bears, the Jets, obviously.
Who's the top 10 here? I'm just curious,
the Niners are
who is in a big market versus who is in a small market?
Most of these are, Dallas is a big market.
Yep.
L.A., New York, technically New Jersey, Vegas, Chicago, San Francisco, Miami, Philadelphia.
Yeah, they're all...
So...
they're all big market.
Right.
Surprised.
Dolphins don't win.
I'm surprised that Green Bay's 13th. I would have thought they might have been lower on the list because, Green Bay is a small town, and the stadium.
Also, that's a brand.
It's
as
an
well.
iconic stadium. Yeah. But it doesn't have the amenities. But I guess that's the way they like it. It's a home field advantage.
I also feel like ownership is a lot more associated with the franchise as well. As soon as you think of the Cowboys, you think Jerry Jones, right? And what's going to happen to the value of the team?
Well, Kraft in New England
sells it, exactly. A Tisch family, Woody Johnson and the Jets.
Please sell the team, please. Come on, that's. And it's funny, they have one of the data points they have is debt as a percent of value. The Bears, it's 1%. The Cowboys, it's 2%. Green Bay, it's 1%. Well, they're owned by the community, basically. So I think this is interesting to look at. If you look at the value of NHL franchises, I don't even know how many of them are worth $1 billion.
So I think the market that you're in plays a value in the valuation. Obviously, we're seeing a lot more
big cities.
Yeah, but as an athlete, as an individual, it probably matters less. Mahomes being in Kansas City is not diminishing his brand in any way. And I think it used to be something where if you want to build your brand, you need to be in New York or LA or Chicago to really become a superstar. And nowadays with social media, with TV contracts, you could see everyone everywhere. You don't need that.
Yeah. Did Mahomes get part ownership of a team when he re-signed?
I don't know. I don't think so.
I think he got,
They're talking about that with LeBron, because I think if they want to bring a NBA franchise to Vegas, I think he was going to have ownership in that. Yeah. There was a whole group.
The last time I remember that happening was Mario Lemieux. Pittsburgh, the team owed him a lot of money, so they said, "Hey, why don't we just give you shares?" There's stuff like how did Al Davis? I mean, I've tried to watch documentaries on this. The Raiders are owned by his son, I guess. Mm-hmm. How did this guy, who wasn't particularly wealthy, was just a football coach, own a franchise that's now worth $9.3 billion? It's a great country, America, isn't it?
Incredible.
You have to think.
Yes. Me and Ray are going to buy a franchise. Obviously, it can't be in an actual real sport, but maybe ultimate frisbee or something like that.
Ping pong.
Flipping.
There you go.
Hey, the water bottle thing, we can make a sport. Look, if pickleball can be a sport, anything can be a sport. Because there's nothing dumber than pickleball. Sorry, but I mean, it's like watching people stand on a ping pong table almost and go like this. I don't know how they have a league. It's another thing Tom Brady invested in.
I played pickleball. Pickleball's
Pickleball's
a lot of fun, Greg. I think you're missing out.
For tennis hacks.
So I actually heard pickleball is more associated with your ping pong skills than tennis.
Mm-hmm. Of course, you're just pushing the thing. There's no top. I mean, you get some top spin on the ball.
There go all the pickleball listeners.
You
are Philly.
I mean, you watch U.S. Open and you see Alcaraz and Sinner running around there. They're diving for things. If you ever see it in person, you can't. If you haven't seen it, you don't understand how topspin works.
Yeah.
Like you see a serve coming, and then right when it gets over that, it nosedives. Like,
You clearly haven't seen the Alcaraz of pickleball, though.
Sure.
Right? He's out there.
There are some failed tennis players now in the pickleball circuit. I don't see the excitement to that. I don't see,
By the way, the amount of money that's been poured into pickleball from a lot of these same owners that we're talking about with these NFL teams and NBA teams is also... It's growing every year. I think who is the owner of the Bucks? Someone put like hundreds of millions of dollars into a pickleball league.
Too much money.
And I think Mark Cuban did as well. So I think like there's a lot of, they want to make it into an Olympic sport. There's a lot of money behind it.
There are big issues with people coming to basketball courts in the city and the suburbs, putting up pickleball nets and playing.
Now tennis courts. They just redid the tennis courts in the park by my house, and now they
put them up.
You can change them into pickleball courts.
Right.
So I think we need to timestamp this episode, because in a year from now, when pickleball really takes off, and Greg goes on a rant about how his pickleball team that he thought was going to do so well,
top 10 pickleball franchises.
If I do pick a team, that team will never win, because that's how it goes. All right, we're running late as it is, so we're going to hold it off there, and we'll save rants for another day.
A lot of fun. Thank you.
You're welcome, Sarge.
Good one.
I'm telling you, the nickname is going to stick.
First-time listeners are going to think that's my name.
That should be on your hat.
It's Sharar. Just say it right.
Shariar.
There you go. Rhymes
it's like Shariar, the new fragrance from Studio 1873 Cologne.
Brut by Fabergé.
You can smell like Shariar. It's right there, Loan Daddy scent, which actually smells like money. So, and mine smells like frustration, because my teams never win, and I'm always frustrated by the Fed. But thanks to Shar and Loan Daddy, and thanks to Ray and Lena, and thanks to our viewers and listeners. I hope everybody has a fantastic week. And of course, tunes in next week. See you then.